Respected viewers, beloved dreamers, today we stand at a crossroad in the world of investment. There's a storm brewing, one that could either change the course of your wealth forever or leave you washed up on the shores of regret. It's the kind of moment that will define your financial future. We've seen this before in a different form. It was the late 90s and the world was captivated by a new shiny technology, the internet. It was an exciting time. Stocks were rising, fortunes were being made, and everyone seemed to think they could grab a piece of that wave. But as we know now, not all that glitters is gold. The Dotcom bubble, as we later called it, was a cruel reminder that hype, speculation, and unchecked optimism can lead to a devastating collapse. The ones who didn't plan, who didn't pause and assess, were left with nothing. And now we stand on the precipice of a new era with the rise of artificial intelligence, a force so powerful, so transformative, that it's drawing the same kind of blind fervor we saw during the dot-com days. And so the question must be asked, is the AI boom another dot-com bubble in the making? Can we truly harness the power of this new technology without falling victim to the same traps that ensnared so many before us? I want to share something with you, something that you must take to heart. The road to wealth isn't paved with speculative investments or fast money schemes. It's built on principles, strategy, and a mindset that refuses to be swayed by the tides of excitement or fear. It's about long-term vision, not chasing the latest hype. There's no shortcut to success. There's no magic stock, no miracle technology that will guarantee instant riches. You've heard this before, I'm sure, but have you truly internalized it? The AI wave is real. It's coming, and it's going to reshape industries, transform the workforce, and, yes, create unimaginable wealth. But it is not immune to the forces of speculation. It is vulnerable to the same emotional roller coaster that pushed so many people to make irrational decisions during the dot-com era. The question isn't whether AI is the future. It is. The question is, are you ready to navigate the hype without getting burned? Let me tell you a story. A few years ago, I sat down with a young entrepreneur who was riding the wave of success. His company had just launched a new AI-driven platform that promised to revolutionize how businesses make decisions. The world was watching, and the capital was flowing in. Everyone told him his company was the next big thing, the next Google, the next Amazon. But as we sat together, I could see the glint of uncertainty in his eyes. There was something he wasn't telling me. So I asked him, "Do you believe in your company, or do you just believe in the hype?" He paused for a moment, and then he said, "I believe in the hype." Now, here's the thing: that moment could have been his downfall. Too often, when we invest in the hype, when we're blinded by the promises of easy wealth, we forget the fundamentals that drive real, sustainable success. Talent is important, yes, but it's not enough. And hype is a dangerous drug. It gets inside your head, convinces you that you're invincible, and clouds your judgment. And when the crash comes, as it inevitably will, it leaves you holding the bag. So what is the antidote to this? What can you do to safeguard yourself from the temptation of jumping on the AI bandwagon without looking deeper into the real value it offers? Let's dive into this. But before we do, remember, this wealth doesn't come from chasing trends. It comes from understanding them, from seeing beyond the noise, from being disciplined enough to think long term. The truth is, you must learn to separate the signal from the noise. You must learn to assess risks carefully and not let the fear of missing out cloud your judgment. In this age of hype, understanding the fundamentals of investing will set you apart. Remember, those who succeed are the ones who understand the balance between risk and reward. They don't let excitement override rationality. They don't let the noise blind them to the deeper truths. And most importantly, they don't chase after short-term gains at the cost of long-term stability. Take a step back, let the noise fade, and ask yourself, do I understand what I'm investing in? If you don't, it's time to learn. It's time to think critically, and it's time to prepare for the long-term game. When we come back, we'll discuss how to distinguish the real opportunities in AI from the fleeting bubbles that are bound to burst. But remember this: in the world of investing, it's never too late to take a step back, to reassess, to recalibrate, and to make better decisions. So take a deep breath, and let's move forward together. As we continue, I want to address a common pitfall that many investors are blindly falling into today. It's the same mistake that cost so many people their wealth during the dot-com bubble. That mistake is speculation. Speculation is a seductive force, drawing investors in with the promise of quick and easy profits. It's the idea that if you jump in now, while everyone else is excited, you can ride the wave of growth and make a fortune. But here's the truth: speculation isn't investing, it's gambling. When you speculate, you're not investing in the fundamental value of a company or asset. You're betting on the excitement, on the momentum, on the promise of a future that may or may not come to pass. This is dangerous. Why? Because it blinds you to reality. It convinces you to overlook the fact that behind every investment, there must be a solid foundation, a real, tangible reason why that company or asset should succeed. Let me take you back to the late 90s. The internet was the future. Everybody knew that. You couldn't open a newspaper, turn on the TV, or attend a business seminar without hearing about the next big dot-com company. There was an entire generation of investors who were caught in a frenzy, thinking that just because a company had a website, it was destined to succeed. It didn't matter whether the company was profitable. It didn't matter whether they had a solid business model. If they were in the game, they were in the race for massive returns. We all know how that ended. The bubble burst. And when it did, it wiped out fortunes. But here's the important lesson, the one that most people still haven't learned. Just because something is exciting doesn't mean it's worth your money. AI is not exempt from this. Sure, AI promises to change the world just like the internet did. But this time we have a critical advantage. We know the dangers of speculative investing. We've lived through the dot-com bubble, the housing crash, and countless other financial bubbles. We've seen the aftermath. We know what happens when people blindly follow the crowd, pouring money into something without understanding its true value. I see it happening again with AI. Right now, AI is being hyped as the next big thing. Companies are throwing out terms like revolutionary, game-changing, and disruptive to get investors excited. But here's the thing. Not every AI company is worth investing in, as just like during the dot-com era, some of these companies will burn out. Some of them don't have a clear path to profitability. Some of them are riding the wave of excitement without any real substance behind them. I remember talking to a fellow investor not long ago, someone who had just put a significant amount of money into a startup claiming to be the next big AI breakthrough. He was all fired up about the potential of the technology. But when I asked him about the company's fundamentals, their revenue model, their customer base, their competitive advantages, he couldn't give me a straight answer. He was betting on excitement. He was speculating, not investing. And this is where many of you will find yourselves if you're not careful. The AI market is full of startups, some of them promising the world, others selling vaporware. But only a few will survive and thrive. And guess what? Sarah, if you don't do your homework, you could end up putting your money into the wrong ones. I want you to remember one thing, heirs. Investing is about understanding the fundamentals. It's about looking past the hype, past the promises, and digging into the reality of what a company is offering. What value does it bring to the market? How sustainable is that value? Does it have a competitive edge that will allow it to thrive in the long run? Let me share a personal experience. A few years ago, I took a long, hard look at an AI company that was getting a lot of attention. They had all the buzzwords: machine learning, artificial intelligence, big data. The hype was real. But as I dug deeper, I realized something crucial. Their product wasn't quite as revolutionary as it seemed. The market was crowded with competitors, and they didn't have a clear path to differentiation. I passed on the investment. And guess what? A year later, their stock crashed. The hype was gone, and so was the value. This is a lesson in patience and discipline. You have to learn to step back, evaluate the fundamentals, and not get swept up in the frenzy. Don't invest in AI just because it's popular. Invest in AI because you see the value that it can bring to the world and to your portfolio. In the coming years, AI will continue to transform industries, create new opportunities, and reshape the world as we know it. But it will also lead to a wave of overvalued, speculative companies that won't survive the test of time. As an investor, you need to be ready to separate the wheat from the chaff, to distinguish between those companies with real, sustainable value and those who are just chasing the hype. Remember, Don't let excitement dictate your decisions. Let your analysis, your patience, and your long-term vision guide you. In the next part, we'll dive deeper into how you can identify the real opportunities in AI, the companies with staying power, and how to protect your wealth while everyone else is chasing the next big thing. But for now, take a deep breath, reflect on these words, and ask yourself, am I ready to navigate the AI hype without falling for the next bubble? Because your financial future depends on it. Now that we've talked about the dangers of speculation and hype, it's time to get practical. How do you, as an investor, separate the real opportunities in AI from the ones that will inevitably burn out? It's not enough to simply avoid the mistakes of the past. You need to actively seek out those opportunities that are built to last. Let's start with a critical piece of advice that many investors overlook. Look for companies with a clear business model and a path to profitability. AI, for all its promise, is still a business. A company that can't generate revenue, that doesn't have a model to make money, is unlikely to survive. So ask yourself, how does this company plan to make money? Are they selling a product that people will actually pay for, or are they hoping to get acquired by a larger firm before their business model ever has to prove itself? The second scenario is what I would call a speculative bet, the kind of thinking that leads to disaster. In the Dotcom era, we saw dozens, if not hundreds, of companies with nothing more than a website and an idea about the future. They weren't profitable, and many of them didn't have a solid plan for getting there. The market loved them anyway, pouring billions into these companies on the hope that someday, maybe, they would find a way to make money. But when the bubble burst, those investments disappeared, leaving nothing but a trail of losses. Don't make that mistake again. With AI, you need to ask the same questions you would with any other businesses. How will they make money? Are they building something people will pay for? Are they positioning themselves in a way that they can grow sustainably? Or are they relying on the next big wave of hype to push their stock price higher? Let's use an example. There are a number of AI companies today that are focused on providing AI tools to other businesses. They are developing software solutions that help companies automate processes, analyze data, and make better decisions. These companies are solving real problems for real businesses. They have a clear, understandable revenue model, and they're targeting industries that are ripe for AI disruption. Yes, that's the kind of company you want to look for. But then there are others that are focused on little more than the buzz around AI. They're selling a vision, not a real product. They promise to revolutionize the world, but when you dig deeper, you realize they're just repackaging old ideas with a shiny new label. These are the companies that are likely to get caught up in the AI bubble, and you want to stay far away from them. Another important factor to consider is as competition. The AI space is crowded, just like the internet bubble. There are a lot of companies claiming to be the next big thing. But here's the thing, if everyone's doing the same thing, what makes one company stand out from the rest? What gives them a competitive edge? If they don't have that, they're just another player in an overcrowded field, and their stock could collapse when the hype dies down. So, heirs, evaluate competition carefully. Look for companies that have something truly unique, a product, technology, or business model that sets them apart from the others. If their competitors are just as capable, it's harder to justify investing in one over the other. But if one company has a distinct advantage, whether it's technology, patents, or customer loyalty, that's the kind of company that has the potential to thrive in the long run. Next, you need to look at leadership. This is a crucial point that many investors overlook. Who is running the company? Do they have a track record of success? Are they focused on building a sustainable business, or are they looking for a quick exit? In the dot-com era, many of the founders and CEOs of these companies had no real business experience. They were young, inexperienced, and often more focused on raising capital than on building a solid business. The result, a lot of failed companies and a lot of burned-out investors. Today, with AI, you can't afford to make the same mistake. Look for companies that have seasoned leadership, people who understand business fundamentals, who know how to grow and scale a company, and who have a track record of success. I've always said that a great business is built on strong leadership, and strong leadership doesn't just mean someone who's good at raising money or getting attention. It means someone who has the vision, the experience, and the discipline to execute over the long term. Let me share another important lesson. Don't chase trends. It's easy to get caught up in the excitement of a new technology, especially when it's as transformative as AI. But as investors, we need to remember that trends are often fleeting. Yes, AI is transformative, but the market is already flooded with so many AI companies, and many of them will fail. Just like the Dotcom era, some of the companies claiming to be the next big thing will not deliver on their promises. So, instead of chasing trends, focus on long-term value. Ask yourself, is this company solving a real problem? Is it building something that will continue to grow and generate revenue long after the hype has faded? If the answer is yes, that's the kind of company you want to invest in. But if the answer is no, if it's just another trend, another buzzword, then stay away. Now, we've discussed a few key principles for identifying the real AI opportunities. In the next part, we'll dive deeper into how to build a diversified portfolio that allows you to benefit from AI without risking everything on a single speculative bet. But before we move on, I want you to take a moment and think about this. Are you prepared to look beyond the hype? Are you willing to do the hard work of identifying real value in a sea of noise? If so, you're on the right path. Now, as you've begun to evaluate the real opportunities within the AI space, I want to talk about something fundamental to investing: diversification. It's one of the most important principles, and yet it's often overlooked in the pursuit of big, quick returns. Many investors, particularly those who are new to the game or who have just seen a few big successes, fall into the trap of putting all their money into the next big trend. In the case of AI, they see the excitement, they hear the predictions, and they believe that they can make it big by betting everything on one company or one technology. But this is exactly the kind of thinking that leads to disaster. You see, the reason diversification works is simple. It reduces risk. Thus, the more you spread your investments across different sectors, industries, and technologies, the less likely it is that any single failure will sink your portfolio. And that's exactly what you need in this AI boom. While it's tempting to get caught up in the excitement of a particular company or technology, you have to remember that the future is uncertain. Even the most promising AI startups could falter. Don't risk everything on one horse. In the dot-com bubble, many investors made the mistake of putting all their money into internet-based companies, thinking they were all bound for success. Some of them were, but many weren't. As a result, when the bubble burst, countless investors saw their portfolios wiped out. But those who had diversified, who had put money into different industries, different kinds of investments, were far more insulated from the fallout. The same principle applies today with AI. So, how do you diversify in this environment? Well, first, you don't have to put all your money into AI-related stocks. Yes, AI is a powerful technology with great potential, but it's still just one piece of the larger economic puzzle. Look at the broader picture. There are many other sectors such as healthcare, energy, finance, and consumer goods that are also poised for growth. These sectors may not be as exciting as AI, but they can still offer stable, reliable returns over the long term. It's also essential to diversify across different asset classes. Don't limit yourself to just stocks. Bonds, real estate, and even commodities like gold can help protect your wealth from market volatility. A well-rounded portfolio that spans multiple asset classes will keep you grounded, no matter what happens in the AI space. One of the reasons diversification is so important is because it helps you withstand the inevitable ups and downs of the market. And when the market is as volatile as it is right now, with AI stocks experiencing wild fluctuations, diversification is your best defense against emotional decision-making. We all know that emotions can cloud judgment, and in the world of investing, that's a dangerous thing. The last thing you want is to make impulsive decisions based on fear or greed. Diversification keeps you grounded and focused on the long-term vision. I also want to emphasize the importance of patience. In the dot-com bubble, a lot of investors wanted to make money fast. They thought that if they jumped in early enough, they could ride the wave of excitement and cash out before things fell apart. But that's a dangerous game. If you're trying to get rich quickly, you're more likely to make impulsive, reckless decisions. The real wealth comes from steady, consistent growth. I'm not saying that you should avoid the excitement around AI. There are real opportunities out there, but you need to be patient. Let the market develop, let the technology mature, and let the strongest companies rise to the top. If you try to chase every opportunity and jump in and out of stocks, you're playing a game that's designed for losers. One final point on diversification. Remember that you're not just diversifying to protect yourself from the downside. This diversification also increases your chances of hitting on a big winner. The more opportunities you expose yourself to, the more likely you are to find something that truly grows and creates real wealth. This is especially true in a rapidly changing field like AI. The winners aren't always immediately obvious, but by spreading your bets, you give yourself the chance to be part of something transformative without betting everything on it. Let me give you an example of how this works in practice. Imagine you have $100,000 to invest. Instead of putting all that money into one AI company, you decide to allocate 20,000 AI stocks, the 20,000 to healthcare, the 20,000 to energy, and the rest to a mix of bonds and real estate. Now you've given yourself exposure to AI, which might be the next big thing, but you're also protected if the AI bubble bursts. Meanwhile, the other sectors you've invested in are still moving forward, and some of them may even benefit from the AI revolution in unexpected ways. This approach gives you balanced security and the potential for growth. It's the kind of strategy that has stood the test of time, whether we're in a dot-com bubble, an AI boom, or any other kind of market cycle. Diversification keeps your portfolio strong and steady. Now, let's address one of the most critical aspects of investing in any hot trend, especially something as electrifying as AI. You staying grounded when the hype is at its peak. You see, when something catches fire in the market, it's all too easy to get swept up in the wave of enthusiasm. Everyone is talking about it. The media is full of breathless headlines, and all your friends are buying into the excitement. People start believing that they'll miss out on an opportunity of a lifetime. The pressure to jump on the bandwagon becomes overwhelming. This is where the true value of patience and discipline comes into play. It's in these moments, when everyone else is blinded by the promise of instant riches, that your character as an investor is truly tested. The most successful investors are those who can separate emotion from logic, who don't get swept up in the excitement or panic of the crowd. The internet bubble of the late 90s provides a perfect lesson in this regard. At the height of the dot-com craze, stocks were soaring, and analysts were predicting that the world would never be the same. Investors were willing to pay exorbitant prices for companies with little more than a shiny website and grand promises. And the hype worked. Other people bought into the fantasy and rode the wave of speculation. But when the bubble burst, those who had been caught up in the frenzy were left with nothing but painful losses. So, what can you learn from this? The key is simple words: don't invest in hype. Instead, focus on fundamentals. Understand the technology, the companies, the market dynamics, and the long-term potential. With AI, for instance, ask yourself, what makes the company you're investing in truly different from others? Do they have a real technological advantage, or are they simply riding the wave of excitement? Are they built for sustainable growth, or are they here today, gone tomorrow? You see, investing is not about chasing the next big trend. It's about finding value, real measurable value, and holding on to it for the long term. Hype-driven investments often have inflated valuations that are disconnected from reality. And when the reality hits, those investments can come crashing down. Take AI as an example. While AI has enormous potential, not every AI company will make it. The vast majority of startups will fail or get outcompeted by larger players with deeper pockets. There's a great deal of risk in these early-stage companies, and the market can often overvalue them based on hype rather than genuine results. But there's another side to this coin. AI also offers incredible opportunities. If you can invest in companies that are genuinely pioneering in this space, the ones with real products, real revenue, and a clear path to profitability, thus you have the chance to be part of a once-in-a-lifetime technological shift. The trick is to be discerning, to separate the companies that are likely to stand the test of time from those that are simply flash-in-the-pan plays. And this takes a long-term mindset. It takes patience, resilience, and the discipline to wait for the right opportunities. It's easy to get emotional when you see others making a lot of money, especially when you're told over and over again that the opportunity is too big to ignore. But here's the truth: those who can stay patient, avoid the hype, and focus on fundamentals are the ones who will truly succeed. History is full of examples where the early adopters made a quick fortune, but those who stuck to their principles, even when things were moving fast, were the ones who built lasting wealth. So how do you maintain your focus and discipline in such an environment? You need to have a clear set of principles that guide your decisions. For me, those principles are simple: invest in businesses that have a competitive edge, businesses that can weather economic storms, businesses that are built for the long haul. When everyone is talking about AI, I ask myself, what is the real value here? Is this technology going to improve people's lives in a meaningful way? Are the companies I'm investing in aligned with the long-term trends of the economy? In the early days of AI, it's easy to get caught up in the excitement. But if you want to truly profit from this technology, you need to look beyond the short-term hype and focus on long-term value. You need to ask yourself hard questions about the future of these companies and the markets they serve. So, as we close out this section, I urge you to remember that hype is a killer. It clouds your judgment, leads you to make impulsive decisions, and sets you up for disappointment when reality doesn't live up to expectations. By staying grounded, patient, and focused on the long term, you can navigate the AI boom with confidence and clarity. As we come to the final part of our journey today, let's reflect on the bigger picture. How can you position yourself to navigate the AI landscape in a way that is thoughtful, sustainable, and above all, profitable? You see, the AI revolution isn't just a fleeting trend or a passing fancy. It's real and it's here to stay. But just like with any transformative technology, its adoption and growth will unfold in ways that are unpredictable. There will be highs and there will be inevitable lows. There will be excitement and there will be moments of sobering realization when some companies will falter and others will thrive. But the question is, how do you avoid falling into the trap of the dot-com bubble's mistake? Buying into the wrong companies, at the wrong time, for the wrong reasons. The answer is simpler than it seems: patience, due diligence, and understanding the fundamentals. But of course, that's easier said than done. Many investors, especially in today's world of instantaneous information, feel the pressure to act quickly, to make moves before the good opportunities are gone. They want to get in early, reap the rewards, and avoid missing out. Here's a lesson learned from years of investing. True wealth is built by being patient, by avoiding the urge to jump on every bandwagon, and by being willing to hold out for opportunities that truly make sense. What does that mean in the context of AI? It means asking yourself hard questions, ones that go beyond the headlines and the excitement of the moment. Does the company you're considering have a sustainable competitive advantage in AI? Is their technology truly revolutionary, or are they simply riding the wave of a buzzword? Is the company built for long-term growth, or is it a flash in the pan play hoping to capitalize on the AI trend before it fades away? You want to invest in companies that are solving real problems, ones that are adding value to the world in ways that we will need in the future. AI will be a major tool in healthcare, in education, in manufacturing, in nearly every corner of the economy. But just because a company uses AI in their operations doesn't mean they are positioned for success. It's not just about the technology itself. It's about how that technology is applied, how scalable it is, and how it integrates with the wider economy. Look for companies that have a clear, understandable use case for AIs, and that are not overvalued based on hype. Companies that have sound leadership, a proven track record, and a business model that is built to endure the ups and downs of the market. Another critical consideration is your diversification. It's tempting to put all your money into the next big thing, to go all in on AI. But diversification is a time-tested strategy that will protect you from the volatility that comes with any emerging market. Yes, AI may be a golden opportunity, but there are also other areas of the economy that will benefit from the same technologies, areas that are perhaps less hyped, but no less important. Real wealth isn't just about making one great investment. It's about managing risk and ensuring that your investments are balanced across a variety of sectors, industries, and asset classes. This is the core principle of smart investing. Don't put all your eggs in one basket. Now, you might be wondering, where exactly should you put your money to take advantage of AI without overexposing yourself to risk? The answer, as with any investment, is to focus on companies that have strong fundamentals, a clear plan for growth, and a proven ability to execute. Look for established players who are integrating AI into their business models in ways that enhance their existing operations. For example, consider companies in the healthcare, automotive, or finance sectors, all of which stand to benefit significantly from AI. But also look for companies that are building their own AI systems, not just relying on others. Yes, companies that are able to develop, improve, and control AI technology in-house are better positioned to weather the volatility that comes with the hype. And then there are the companies that are making the underlying tools for AI, companies that provide the infrastructure, the chips, and the data processing that power the algorithms. These companies might not be as flashy as the ones selling AI products directly, but they have a more stable position in the market. As we close this conversation, I want to leave you with one final thought. The AI boom is not a bubble ours, but it could become one if we let emotion and speculation rule our decisions. It's up to you as an investor to steer clear of the temptation to chase after every new headline and to focus on the long-term picture. Remember, the truly successful investors are the ones who see through the noisy, who have the patience to wait for the right opportunities, and who build their portfolios around fundamentals, not fads. As AI is a golden opportunity, but it's also a space that requires wisdom, caution, and a willingness to ask tough questions about value and sustainability. I encourage you to take your time, research thoroughly, and be patient. The best opportunities in the AI space, the ones that will provide long-term, sustainable returns, are out there. But they're not the ones that everyone is talking about today. They're the ones that will stand the test of time, not just ride the wave of excitement. So, as you move forward with your investments, keep your eyes on the horizon, stay grounded in your principles, and know that true success in investing comes from avoiding the hype, embracing the fundamentals, and playing the long game. As we bring this discussion to a close, I want to remind you of a simple, yet powerful truth in investing. The greatest wealth is found in wisdom and patience. The AI boom, like any technological revolution, is a powerful force capable of reshaping industries, creating new opportunities, and driving growth. But as we've seen with past bubbles, it also comes with risks that can catch even the most experienced investors off guard. The allure of AI is undeniable. The promises of what it can do to enhance productivity, solve complex problems, and open doors to unimaginable opportunities are all real. Yet, for all its potential, it's important to remember that not every company jumping on the AI bandwagon will succeed. Not every AI company will stand the test of time, and some will be swallowed up by the very hype that elevated them in the first place. So how do we, as investors, navigate this AI revolution with wisdom? First, focus on fundamentals. No matter how exciting a technology is, the principles of good investing remain the same. Find companies that have a sustainable business model, strong leadership, and a clear path to profitability. AI should be viewed not as a magic bullet, but as a tool that enhances value and solves real-world problems. If a company can demonstrate that its AI application has genuine utility and that it can scale and generate revenue, then it's worth a closer look. Second, exercise patience. The AI market is volatile and the temptation to chase every wave of hype is real. But remember, for us, the greatest investors are the ones who wait for the right opportunities, the ones who are willing to be patient and avoid getting swept up in the latest trends. Our true wealth is built over time, not in a rush. Third, diversify. Just as in any other investment strategy, you must spread your risk. Don't put all your eggs in the AI basket, no matter how tempting it may seem. Explore other sectors that are also benefiting from technological innovation and growth. Diversification isn't just a safety net. It's a way to ensure that no single market shock can wipe out your hard-earned gains. And finally, stay grounded in your purpose. Why are you investing? Is it to build long-term wealth for your family? Is it to leave a legacy? Your financial journey is a reflection of your values, and if you invest with integrity and wisdom, you will always be on the right path. AI is not a get-rich-quick scheme. It's a tool, a transformative force that, when used correctly, can be a powerful ally. But like all tools, its value comes from how it is applied. This focus on the companies that are using AI to solve real problems, not just jumping on the bandwagon to ride the wave of excitement. Be patient, do your research, and invest with purpose, not emotion. As we close today's conversation, remember that the greatest investors don't follow the crowd. They are the ones who stand firm, think critically, and stay focused on the long term. This is your opportunity to build lasting wealth, but only if you approach it with the wisdom, patience, and diligence that we've discussed today. So, as you venture into the world of AI investments, remember the true rewards come not from chasing trends, but from AI's understanding the fundamentals, diversifying your portfolio, and staying the course with discipline and purpose. The future of AI is bright, but it's the investors who stay grounded, who stick to their principles and avoid the hype, who will see the greatest rewards. Invest wisely, invest with purpose, and invest for the long term. Thank you for joining me today. Take these lessons, apply them in your own journey, and may your financial future be filled with wisdom, growth, and lasting success.